episode of Commercial Property Roadshow. You're here with Helen Tarrant, and today I'm actually going to talk about inflation. And the reason I talk about inflation is because it's such a topical topic. Everyone wants to talk about how, we're hitting 7%, 8% in different states, and that, we want CPI increases over fixed increases, where, 2 years ago, literally people going, I'll be happy with a 3% rental increase per year, or a 3% rental increase, or a 4% rather than CPI, because CPI was at 2% and it was actually below 2% before COVID, right? It was like 1.8% in Sydney before COVID, right? And it will go back to that, but it may take anywhere from 1, 2, or 5 years to get to that. And look, when we look at the RBA predictions, it looks like, the interest rate might stay and keep going for the next 6 months. It might plateau out after 6 months, and it might come down in 2024, right? But inflation looks like it might be here to stay for at least a couple of years. And how does that impact you as a property investor and purchaser? So I want to share with you a little bit about inflation and how that works, and what is the thing about money, right, that you need to see is the value of money is eroded through inflation, but your debt is not. And this is a really important thing to think about, because whether you should invest now or 2 years from now, you got to decide, who do you want to have the wealth, you or your vendor or someone else, right? And that's why I'm making this video. So let's talk about inflation. What exactly is inflation, right? So let's adjust the camera. So what exactly is inflation? Now, there's a couple of things. Now, firstly, it means that you pay more for the same type of stock, right? So let's say you have bread. You buy bread for $5 a year ago. Today, bread is at $7 a loaf, right? You buy coffee at $3.50 today. And, years now, the coffee could be $4, $4.50, or even $5. We're seeing coffee at $6 in some areas, right? So inflation is what happens with the value of money, right? The value of money diminishes, so that for the same $5 what you used to be able to buy, you can't buy anymore. And the same analogy goes towards property. The same thing you can buy for $500,000 today or $1 million today, you will not be able to buy that same stock again in 2 years' time, right? And this is where fundamentally things start to shift, right? And whether you should buy now or in the future, you need to look at that, right? So let's have a look at this, and then I want to show you some inflation calculators, and you can see how that's actually going to impact you when you just make that decision. And whether you want to buy now, 2023, or wait out to 2025, that's entirely up to you. I just want you to be informed and know what you're looking at, right? So let's say there's a property at $1 million, right? So and inflation is at 7%, which we have seen that's pretty much average across the board, right? We have seen inflation probably at a little bit lower in Sydney, but we've definitely seen 7% in we've seen 7% in Brisbane, and we've seen about 8% in Adelaide, and 7.6% in Perth, right? So let's average out at 7%, right? So what does that mean? It actually means that your money, the value of your money, is decreasing by 7% per quarter, per year, whichever way you like to look at it, because it's averaged out. It's actually decreasing by that, right? So the property that you are buying, which means that the buying power, your buying power is less, right? So it's reduced buying power, essentially what inflation is. Right? Reduced buying power. So reduced by 7%, right? So that means that with $1 million you buy in 2022, in order to buy that same property in 2023, you have to add 7% more to it, right? So on $1 million, that equals to $70,000, right? And you might be thinking, yeah, well, the interest rate goes up, so the property price must come down. Now, what we have seen is the last interest rate, the greatest interest rate we've had in history or in living memory, has been in the 1990s, where interest rate were up to about 13%. And yes, the prices of property were probably 130,000 or 200,000 in Sydney, especially in the outer rims of Sydney. They were around that. But over time, we've had steadily interest rate going downwards. It might have come back a little bit, but it's continued to go downwards. And of course, the value of the property has gone up. And every time it's gone down, it hasn't really impacted the property in the fact that it's dented a little bit, but it hasn't had a dramatic drop in the market, right? And so in commercial, when people talk about that the value must go down and the returns must go up, that's not the case, because commercial is traded on demand and supply, right? If there's a lot of people, and I can tell you that at the moment, the hottest market at the moment is 800K to 1.2 million. If there is 3 to 1 purchases, like 3 purchases to 1 property, if you are not going to buy, someone else will buy it. So it's actually not going to impact on the actual the value of the property. So the value of the property is not going to drop. As long as there's a buyer there, the value of the property is not going to drop. And if the value of the property is not going to drop, someone will pay $1 million and someone will pay $1,070,000 in 2023. Because remember, rental increases happen every year. Next year, the rent will go up on the property. So let's say that you got today, let's say you got a 6% yield, right? That's 60K. Next year, let's say that, it did go up by inflation. That will also go up by 7%. The value of your property will also go up by 7%. But it might also just go up by 3 or 4% increases. But however, the value of the property will go up because there's so much demand in the market. People are not going to really, be really so stringent on getting the extra, 10 basis points. So they're not chasing 6.1% over 6%. It'll be just fine, right? And that's what I mean. It's about the market forces. And that's what I want to show you right now is what happens when we plug this into a calculator and we see the value of like the money that you have, what it will be, or the property of it, that if you bought $1 million, what that would be in 2023, 24, 25, going onwards. So you can have a look at that. So let's jump online. I'll share screens and we can have a look at that. So I'm just going to share screens with you here. And you can see here that we'll put $1 million in here. And that it's $1 million between 2022, which is where we are now, to 2023, and I put a 3%. But we know that the interest rate is going to be, well, not interest rate, the inflation rate is really sitting around 7. So if it's going to sit at around 7, see what I mean about the calculator actually looks at, it goes from the property price, the value of that property goes from 1 million to now being worth, because of the less buying power, $1,070,000, right? But what if that repeats in 2024, right? 2 years of that, right? It's $144,000. So if you choose not to invest today in 2022, but invest in 2024, you would have to pay 1.15 million, almost 1.15 almost, for the same property you would buy today for $1 million, right? So you pay an extra $140,000 or $150,000 for that property, right? And God forbid, look, during that time, there's a little bit of a tweak. Let's say that in the rents, or that the tenant had a new change of tenant, you're actually paying a lot more, right? So really, to grow your wealth, you need to invest when you have the money with the right deal at the right time, rather than focused on what the market and just sitting and being scared, right? And invest in education, mentorship, and implementation really get you there, because that's what it's going to look like in 2024. And people won't believe this, but everyone wish they bought one extra property back 10 years ago or 5 years ago, right? And let's say in 2025, the same thing happens. This is what you're going to pay 1.2 million for a property that you would pay $1 million today, right? But the really interesting thing is this, right? I'm going to show you this. This is really interesting that people don't realize is that, and I'm going to stop sharing this for a sec. This is what people don't realize, is that there is no inflation on debt, right? And what do I mean by that, no inflation on debt? Let's say you buy a $1 million property, right? And let's say that you use, in commercial, you have the lease stock option where it's not testing you for servicing, it's not testing you for looking at your asset liabilities, but it is just lending you against the lease, right? Let's say you borrow 650K, which is 65% LVR of $1 million, right? So you borrow that. Let's say with inflation, right, the property price, let's say in 2025, we just looked at it, it's worth 1.2 mil. It's probably worth 1.25, but let's call it 1.2 mil, right? Now, the new value of that property is 1.2 mil, because the value has to go out there and value it, but you still owe 650,000 on it. So while you started off here with zero equity, right, because you got to put in your 350 and you start off with zero equity, in 2025, you all of a sudden have equity, just natural equity, without even tweaking the leases or doing anything. That's if you just sat on your ass and did absolutely nothing, you would still have got equity. If you did something, you have massive equity, but if you did nothing, you would still have equity. And let's have a look how much equity that is. So if you borrowed again at 65% LVR, 1.2 million, right? You will get out the new loan's 780,000. You borrowed 650 before, right? You borrowed 650 before. That's the original loan. Follow the old loan, right? So what you actually will get out of it is 130K, right? 130K is what you'll get out of it by doing absolutely nothing, buying the property, taking the cash flow, whether it's 5K, 10K, or 20K, depending on where you buy. You're out of just pure inflation in 2 years' time, because we're at the end of 2022, right? 2023, 2024, 2025, property's worth 1.2 million. Picking up 130,000 without you having to tweak the property. If you tweak the property, probably going to be more. Might be another extra 100 grand. 130,000, which you can use for another property purchase, right? And which means that that's how you build your wealth. You buy when other people are scared. You buy in a time when no one else wants to buy. You pick up the bargains now because people don't want to buy. Your buying power is so much stronger, and you basically are waiting, sitting duck, waiting for wealth to come to you, right? And that's what I mean about how inflation. Buying now with inflation coming up is actually good for you. It's actually brilliant for you. And the reason you want to do it is because you're getting free equity in the future by just the market forces. That, coupled with you tweaking it, is going to give you unbelievable equity moving forward. And with commercial property, you're going to be positively cash flow. And even if you buy in Metro at a 6% yield, even with the interest rate going up, you'll be neutral. Even if you're borrowing 100% of that, let's say your 350 deposit is like borrowed from a refinance or anything, you still be neutral, you still hold it. What comes out of the back end is more money for you to spend on the next property. That's how you build your wealth, right? If you're too scared getting into the market, you're going to lose 130. So you want to make that decision right now. Do you want to capitalize on inflation, get the 130,000, or you want to be there and lose out on it, right? Lose out on the cash flow, lose out on the natural growth, plus anything you can tweak on the upside of it. That's entirely up to you. But if you want to pick this up, you want to run with it, you want someone to help you with it, you want someone to absolutely build you that portfolio, the cash flow rich portfolio, surround you with a team, give you the right strategies, tell you where to buy and where not to buy, because that's really important in a market that's not stable, reach out to me. Helen Tarrant, Unicorn Commercial Property, link below. Join us for one of our events, find us, send me an email, and let's jump on a call, do a strategy for you, and let's get you started building a cash-rich portfolio through commercial property. Hit the bell, subscribe. See you on the next video.